I'm going to walk you step by step on how to make your very first investment. These steps are what I would do if I were to start investing today. Hi, my name is Nnamdi. The goal of today's video is to help you take action and start investing as simply as possible. Whether you have invested before and you wish to do it right this time, or you're an absolute beginner and don't know where to start, this video is for you. First, a disclaimer. I am not a financial advisor, so everything I will share is not financial advice. I am simply just sharing what I would do if I were to start investing again in 2024. Another fact that is important to put out there is that I'm going to be sharing things from the perspective of the UK, but the principles, the steps that I'm going to share can be applied in wherever country you find yourself watching this video. Most people think investing is very complicated, but there is no time in human history where investing is this simple. You are probably watching this video maybe on your mobile phone, and that mobile phone is a tool that you can use to start investing today. But before we dive into the nuts and bolts of investing, let's back up a little bit and talk about what your investment strategy should be. And what does that even mean? An investment strategy simply means the path that you want to take to get to your goals. Or you could also say that these are set of rules, preferences, and behaviors that will guide your investment decision. To determine your investment strategy, we will look at what has worked for many years and has made thousands of people millionaires. We will also consider the advice from the best investors. If there are any similarities with what has produced wealth for people in the past and what the investment gurus are saying today, then we know we have a solid strategy that we can use and also get the same kind of results. And there is one investment strategy that falls into this category. This investment strategy was echoed by the Oracle of Omaha, Warren Buffett himself, and I mean this guy. And just for a bit of background, his company is one of the biggest companies in the world with a compound annual gain of roughly 20% from 1965 till date. So what did Warren Buffett say to the average investor like you and me? Let's listen.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now.
In summary, Warren Buffett is saying that the winning strategy for most people is to buy the S&P 500, which is an index fund, and you do this for the long haul. It's that simple. You don't have to be a genius to implement this strategy. The S&P 500 is a fund that comprises of the top 500 companies in the US. So that means that if you buy this one fund, you have automatically bought companies like Apple, Google, Facebook, Coca-Cola.
One ring to rule them all.
In my last video, I explained what an index fund is, along with other investment jargon that confuses people. So if you don't know what an index fund is, you can watch this video before you continue with the rest of this. So how do we go about buying these index funds? I wish it were as simple as going to www.indexfunds.com. You buy index funds through an investment platform, and there are plenty investment platforms that you can buy index funds from. Many of these platforms have apps, so that means you could use your mobile phone and do it right on the go. But before you choose a platform, there are a few things that you want to consider, like fees. I highly recommend that you look at this closely because this is the only variable you can control. That is how much you're going to pay in fees. You can't predict what the stock market return would be, but you can control and predict your fees. And the rule of thumb is the lower the fees, the better it is for you. Another factor you want to consider when choosing a platform is, do they offer tax advantage accounts? In the UK, that would be an ISA, an individual savings account. I will talk a lot more about this in a bit. And lastly, you want to consider the ease of use of that platform. So what is an ISA, or an individual savings account? An ISA is a savings or investment account in the UK that allows you to save and invest money without having to pay tax on the interest or growth of your investments. That means that according to the rules today, and it's very important that I say this because the rules can change in the future. But as at today, you could put in a maximum of £20,000 each tax year into your ISA account, and that money can grow as big as it likes, and you won't pay any tax. For those of you that are watching outside the UK, don't be sad. There will be an equivalent of this kind of account in your country. So if you do a Google search today for the best platform to invest stocks and shares ISA, you will see loads of options from Vanguard, AJ Bell, Trading 212, just to name a few. Be sure that these platforms satisfy the criteria that I've mentioned earlier. Personally, Vanguard ticks all the boxes for me, and I've been using Vanguard Platform to invest in index funds since I relocated to the UK. It's important to also mention that Vanguard only offers index funds, which is perfect for me. But if you do want to buy individual stocks, like you want to buy an Apple stock or you want to buy a Google stock, you can't do that from the Vanguard platform. So you have to choose another platform that offers that service. So you've decided on your strategy and the platform that you want to use to invest that is going to offer this tax benefits. And if you want me to do a walkthrough on the Vanguard platform on how to set up this account, just type "I want" in the comment section. The next step is to sign up to your platform of choice. Signing up is usually easy. Just some personal details and you're good to go. But you have to make sure that you have your ID and bank details handy because you're going to need it. During the sign up process, you'll get the option to either open a standard account or an ISA account. You have to pick the ISA option, obviously. Now, to buy your first index funds, there will be lots of options for you to choose from. And if you check YouTube, there will be lots of recommendations out there. But this is going to be a personal decision that you would have to make. Personally, between me and my wife, we have only ever invested in two funds, the S&P 500 and a global index fund. But there are lots of other indexes like the FTSE 100, which tracks the top 100 companies in the UK. You could also decide not to do index funds, but instead pick a target date fund. A target date fund is a fund that is determined by your retirement age. So if you're going to retire in 30 years, 15 years, you choose your fund based on those years. And every year, counting down to that retirement age, the fund automatically rebalances itself from high risk to low risk. Basically, you're looking for a diverse fund with a good track record, even though past performance isn't an indication of future performance. But you're looking for, most importantly, with a fund with low fees. Very simple. You don't have to analyze it. You need to just pick one fund and move on. The biggest disservice you can do to yourself is to overanalyze and not take action today. Because the biggest losers in this game is not those that have invested, but those that don't start investing at all. Remember what Warren Buffett said. It's time in the market that counts. It's time in the market that allows compounding to work in your favor, to start building wealth. I am stressing this because I have seen people procrastinate and delay making a decision. Before they know it, a year is gone. If you're confused, just pick one fund, either the S&P 500 or a global index fund. These are the average returns of the Vanguard S&P 500 and global index funds for the past 10, 15, 20 and 30 years. That's not too bad because many active investors can't boast of these numbers. To win with investing, you must invest regularly. Set up a direct debit to invest monthly and forget about it. If you're thinking short term, there is a real chance that you will lose money. But in the long run, you have a 99% chance of building wealth. Look at this graph of the S&P 500 for the past months, for the past year, for 5 years, for 10 years and 30 years. What do you notice? The longer you stay invested, the greater your chances of winning. Don't get carried away by the daily market fluctuations. It's bound to happen. That is the price you have to pay for investing in the stock market. And trust me, the sky is not falling. To buttress this point, let's look at this chart that shows the return of the S&P 500 every year for the last 30 years. No single year is the same. It's green, meaning that you made money, and the next year is red, meaning you lost money. But overall, there are more greens than red. Breaking news: this graph would look the same or similar for the next 10 years. There's going to be lots of green and lots of red. But our strategy is to invest monthly, whether it's a red month or a green month. In fact, if you buy when it's red, you could call that you're buying a discount. So if you want to start investing in 2024, one, I'll use the platform that lets me open an ISA account, and I would invest in that ISA account. I'm going to invest in a low-cost index funds. A global index fund or an S&P 500 fund would be my first choice. Also, I'm going to set up a direct debit and forget it unless I want to review that amount upward. Index funds are meant to be easy and low cost, and this works well for most people. If you found this video helpful, hit that subscribe button and like button.